We're live. Welcome back. First episode of 2026. We have been offline since Christmas, so plenty has happened. Jared's got a cat since we last spoke. Acquired one through the cat distribution system.
Which is not real, by the way.
Which is not real, but it's
It is. It's a way how cats distribute numbers where there are no cats. It's a thing. Look it up.
we're just going to have to take his word on that. I don't know anything about the cat distribution system. Nick has been back. He's had some time on leave. How has it been, Nick?
Yeah, it's been good. We're away up the coast for a few weeks. Back now. I think you and I kind of took mutually exclusive holidays. So when I was here, you were away, and when you were here, I was away. So I feel like that's where we've been offline for a little while. But was it the 20th of Jan? We've missed a few potential weeks, but the stars have aligned again, and we're back.
But it's been a good week to come back. Markets are green. Bit of news, ish.
Greenish.
Whatever.
They were green until about, a day and a half ago.
Yeah, we've got some new light colours as well. Thank you. Green.
Yep, we've invented new colours just for this podcast.
And the other bit of...
that's it, they're done.
Well, the other fascinating news that we've learned is the lily plant in the back here has got a beautiful flower since we last left. And for astute viewers out there, you're thinking, well, hey, how come a plant inside a room has been flowered? Like there's no sunlight. Well, great question. As we've learned, someone left the correct colours of lighting on with our system, and it told the plant to flower. The orange and blues, I believe. Orange and reds.
Science.
Crazy stuff.
Acquired knowledge from growing dubious plants.
So we're back. The news is, we came back within a whisker of hitting 100K. Well, Bitcoin came within a whisker of hitting 100K. There's been some news. So there was talk that maybe the Clarity Bill that we've talked about now for months, which we thought was going to get done, may get done. It has not yet gotten done. In fact, it may be further from getting done than we thought because...
Good update, Lee. This is great.
Well, it's been rusty. I've been away since late last year.
Is it got done? No, it hasn't got done, but maybe it'll get done.
Well, the reason it's further away from getting done is the industry or the crypto industry and legislators seem to be at loggerheads over some key elements of this bill, which we're going to discuss in more detail. I didn't want to give it all away in the intro, Got to save my best material later on.
Something away, not just things got done.
Well,
but anyway.
No, things haven't gotten done. We're at loggerheads. That's the problem. Trump has been at his Trumpian best. There's talk. So we got some green action over the what? There is the green. Oh, the green's back. Sorry, I was wondering.
I just put something together, by the way.
Yes.
Trump, this whole Greenland deal.
Yeah.
That's purely for the markets. He's trying to make the markets green. But
really?
Because it's Greenland. He's like, how do I fix the markets? I know. I'm going to take over Greenland. And anyway, it's the opposite. We'll get red. If he invades Greenland, we're going to get some red markets, not green. Silly Trump.
Well, the handling of Greenland seems to be. We're still waiting to see the outcome of it because Donald Trump is negotiating. Of course, the Europeans have retaliated against some of the proposed tariffs of Trump, which saw some retaliatory punitive measures by the Europeans, which of course has not been great for crypto markets, but has been excellent for the gold and silver markets, with all the nonsense going on over there.
It's a commodities bull market.
Yep. And I guess the other thing we need to look at is overall the market has been it's been mildly green over that point in time.
Yeah, we're higher than we were last week. I will grudgingly agree to that. But yesterday we had a big dump. We were sort of somewhere around 95,000 US for Bitcoin terms. We're now down to like 92. So there's a fairly significant kind of washout. But prior to that, we were sort of 97. I think we might have tapped to 98K. We were threatening 100K, which, would be cool if we hadn't already been over 100K. And we're sitting here like praying for something that's already happened in the past. We're not even close to all-time highs. Anyway, I'm not bearish. I'm just upset. It's my first week back.
You want it all and you want it this week.
Yeah.
Well, okay. Well, let's just jump in the news then because we're going to try and stay on track this week.
Okay. Let's do it.
We'll try. Doesn't mean we will, but we'll do our best to get through the news without all the nonsense. We'll see how we go. So the big news in the headlines this week is the US crypto market structure bill. Not for necessarily a good reason, but for the reason it seems to have stalled with
Yeah,
the industry and the legislators at loggerheads now. It seems to be proceeding in good faith, but there are some concerns over some critical measures.
Yeah. I guess for me, the big thing that sticks out here is Coinbase. Well, sorry, not the big thing. Coinbase is the reason why this is stalling. They've publicly gone out to market and said, hey, we don't like this bill. We would rather nothing than this bill. They think this bill's worse than nothing, actually. They think we're going backwards. And it's sort of, Coinbase is one of the biggest exchanges in the US, if not the biggest. A lot of people listen to them. They've got, in terms of the ETFs, they hold a bunch of the ETF, they do the custody for a bunch of the ETFs. They're a big player. And so when they say stuff, people listen. My main takeaway, or one of the big things I was looking at for this, is that they're whinging about the yields situation. So right now, exchanges can pay out yields. After this Clarity Bill in its current draft goes forward, exchanges won't be able to pay out yield anymore for crypto stuff. And this is interesting. People if you look at it on the face of it, it's like, no, fair enough. Like, why should banks be able to pay out yield? You put money in there, you earn interest on your money that you deposit into a bank. Why can banks do it, but crypto can't do it? This seems unfair. Why are banks, and the banking lobby has come forward and, made sure this has happened, or made sure this is part of the bill, and Coinbase is against it. Why is that fair?
Yeah, and this seems to be the main sticking point. There's some other issues that I guess they're considering, like there's a de facto ban on tokenized securities. There seems to be some overly zealous restrictions on DeFi, and also I guess the concerns around the fact that the CFTC would subvert some of its authority across to the SEC. But the main thing seems to be, I guess, the interpretation at least, is that the Armstrong is saying, well, hang on, the main reason we're upset about the fact that you won't let us have interest-bearing stablecoins is that it's basically the banking lobby, which I imagine the US is quite powerful, coming in and saying, well, look, we want to protect our patch, and this is a good way to prevent some competition into US dollar deposits effectively.
Yeah, and it is interesting because you look at sort of what Circle/Coinbase are offering, and it's of the 4% range, and you look at what the banks are offering, and it's of the 0.1% range. So there's clearly, like, if you have an easy choice between the two, everyone's going to buy go the 4% yield and earn more money on their dollar. I think this is there's more to it than this though. So Coinbase, something I thought was quite telling. Coinbase seem to be the only ones who are protesting against it. Yeah, well, even someone like Kraken, who is not identical, but like the same kind of pedigree as Coinbase. They're a massive US exchange. They're like, no, we're happy with this. Let it go.
And some Ripple and some others, some stablecoin issuers, I believe, were okay with it as well.
Yeah, that's right. And if you sort of look a bit deeper, you see, okay, so Coinbase's, a lot of their revenue come from their yield products because they are so tightly integrated with Circle. They're it's a massive partner of theirs. And Circle are the issuers of USDC. And so when if they were to lose this ability to pay their customers yield, then people just wouldn't use USDC anymore. They wouldn't hold it. They wouldn't deposit it on Coinbase. It'd be a big deal for Coinbase. They'd lose a lot of their revenue. Whereas Kraken has kind of got a different way of doing things. So Kraken have a yield product as well, but they don't sort of rely on it as much as Coinbase does. And secondarily to that, Kraken back in 2024 or 2025, Kraken got a banking license. So they've got this Kraken bank kind of entity set up. And so if you sort of, join the dots, I imagine the way they would play it is they would say, okay, so Kraken, the exchange, can't offer yield. Doesn't matter. We'll just offer it through our bank. We'll get the same yield and we'll just offer interest through our bank, which has nothing to do with the Clarity Bill. So that's probably why not only could they continue to offer their customers this yield, like this enhanced yield, but it would be kind of screwing their big competition, Coinbase, at the same time. And so it becomes as no surprise to me then that Kraken are like, no, we're fine with it. Let it go. Don't worry about it. No questions, please. So we can flip this whole thing on its head again and sort of say, okay, are banks the big baddies in this situation trying to protect their revenue? Because that's kind of the obvious outcome when you look at it from a crypto native point of view.
But it's not so clear cut. There is some vested interests everywhere.
Exactly. And I kind of like to think about this, the market or society almost as a whole. If we, and I'm just going to like do some broad strokes here. If we think about what would happen if Coinbase were allowed to offer yields to all of their customers, and, in general, people look at the yields and go, okay, I could get this at the bank or I could get 10x this at Coinbase. They move a substantial amount of their money out of their bank account and into Coinbase. Now the banks have a substantially less sized deposit that they can use for lending and whatever else they do with that money. So retail deposits is a huge thing for banks because they basically pay nothing on it. It's very, very cheap capital. And then they can use that to lend out to people or to small businesses or whatever. And it's all rehypothecated, right? It's the fractional banking system where they can take in $1,000, lend out $900 to someone else who puts it in a bank. They can loan that, and they can keep generating liquidity from this original $1,000. It telescopes out to much more. And if suddenly they don't have the ability to do that, well, what happens now? Okay, so lending becomes harder for banks because they just don't have the same amount of money. So instead of using this cheap capital from retail, they have to start going elsewhere for much more expensive capital. So interest rates go up. So people who are wanting to buy houses, for example, can't afford big houses anymore. Property market's probably going to get severely suppressed. Small businesses who go for loans, who are trying to build their business, they need more money to do stuff to create economic activity. They can't do that anymore, or they can, but it's much more expensive. So everything gets affected. There's a lot of runaway follow-on effects from this. And again, as I said before, this is very broad strokes. I don't know if this is, no one knows if this is exactly how it would play out. But I think it's not so simple as to say, banks are just trying to protect their business model. And I think that is true, but I think there's also structurally some
more concerns to keep in mind
in the market that this could really affect if it were to go through.
Yeah, but I guess you touched on the point. I guess the challenge is always going to be knowing exactly how those knock-on effects would work, which does tie into our next point, because we do have to talk about, for example, the New York Stock Exchange is going 24/7 with stock tokens, right? So I guess maybe a counterpoint to that, and again, I'm just probably going to play devil's advocate here, would be to say, let's say, for example, yes, a lot more people did keep their deposits in things like US dollar stablecoin reserves, Circle being one example, but then they use that fund into, I guess, they developed more DLT-based loan products, or the New York Stock Exchange, for example, is going to offer tokenized securities now, which have multi-chain settlement options as well. So a lot of those funds then might also find their way into things like investment and liquid capital markets, for example, which the benefit there of, like, say, for example, 24/7 settlement or trading would be along obviously just the instant settlement, but increased liquidity. So does people having more assets in things like that then allow more innovation to happen in the market, where loan products become cheaper, more accessible, potentially, and deeper liquidity in the capital markets, which has a flow-on effect then for people's wealth. So not to say that one or the other is correct, but just there are a lot of moving parts here, and that's probably the really interesting bit. But also a segue into the New York Stock Exchange offering, a securitized platform. So I have to, because I was like, well, hang on, this is pretty interesting, right? So the New York Stock Exchange, now, when you look into the New York Stock Exchange, they have kind of been, it's not surprising that they are adopting this new technology. In fact, I mean, if you think back, they were one of the first places to introduce computers.
Right.
And, they brought in, once the internet came along in the 80s and 90s. So most people think that, the stock exchange moved to being computerized maybe in the late 80s or 90s. Bit of trivia for you. When was the first computers used by the New York Stock Exchange?
1987.
Way off.
I'm glad I'm way off.
1966.
Shocked me. Really?
Yeah, 1966 is when they first used computers.
They're using punch cards?
And some extras just for a bit of context. Before that, it was all done. Okay, so you got that one wrong, but here's your chance to redeem yourself. So
I got it wrong for your benefit. Of course I knew it was 66.
But as you can imagine, the computers back in 1966 weren't particularly well equipped for dealing with large volumes of transactions. The computer, even though they initially used some computers to help with some of the processing, they still wasn't quite up to it. So the actually kind of moving across from analog to digital, yes, did happen in the 80s and 90s.
Right.
But before that, there was a combination of the old school trade floor and some computerization coming into it. So it's not like technological change has not been, there's not a precedence there for upgrading when new technology comes along to offer a better product.
Yeah, it totally makes sense. You know, you're going to move to what's the quickest and the fastest and the thing that makes you the most money. And
Right.
it's just everything is sort of, you know, financially driven like that, I think.
So back in the day when it was just the trading floor, and quite literally there was guys just yelling at each other to make deals, there was the way they used to roll out information. For example, you've heard of the old ticker tape, because at the point where the ticker tape was rolling, so there was that, you know, they stand on the trading floor and you see the images of the guys standing around yelling at each other. They communicated mostly by hand signals.
Yeah,
So they'd take orders from their customers, you know, the broker or whoever would then send the information down to the guy on the trading floor, and he would make his hand signals or whatever to make the trade. And then back in those days, they had T+5 settlement, because then they had to go, at the end of the day, they had to work out who did what. They all keep their notes. They all meet up together. They keep track of what happened. And then they had to go and process that all through physical paper-based issuances of certificates and whatever they had to do. I don't know the exact minutiae of the daily transaction thing. But then they had to go and settle it. And settlement took 5 days.
Yeah, wow.
Right? And the main mode of communication was hand signals. And guys yelling at each other literally on a pit floor. Guys calling up, and the source of information was very clunky back then in those days as well, because they would rely on the newspapers. So when the newspapers were coming out, that's when they would kind of go out and go, oh, hey, I've read the newspaper. Yep, Mr. CEO of Johnson & Johnson. Sorry, I shouldn't say that. I don't know if it's Johnson & Johnson. I'll make up a fake. Acme ABC Co. has been indicted on fraud. You know, that's when the guys, once the bell rang, they would start doing their hand signal, which was obviously sell.
Obviously.
And then the ticket tape would then start flowing, saying, yeah,
That's interesting. Like
the price has been bid way down.
Suddenly, like, being a journalist is, you know, you've got access to all this information before the market knows.
Yeah.
For the broader market knows.
So insider trading in those days must have been very lucrative,
So easy.
because the information flow was very lumpy. And of course, information flow started to speed up dramatically with the things like TV, because before that was just newspapers.
Yeah.
So I guess when the bell, actually, you know who had no excuse for making loads of money was the paper delivery boy.
Yeah.
That guy should have been rolling it. He was the first one who looked at it. He could have got his bids in before the news had hit.
Extra.
The real money was not in selling papers. It was the information. He
So
didn't
what's
realize
the
it.
hand signal for sell?
I have no idea.
Just do one. Really complicated. That'd be interesting, actually, if the buy hand signal was slightly less complicated than the sell. I wonder if that would skew the market over time, because it was just easier. People got the buy signal quicker. They were able to, you know what I mean?
Yeah.
Like a sort of just a long-term consequence of the dexterity on the human hand.
Yeah, here we go. Open outcry was called an open outcry system, but quite literally they had sell hand signals and buy hand signals. So here we go. So here's some facts which I didn't get into. The main sell hand signal involved having your palm facing outwards, away from your body, often with an open extended hand, signaling take it away.
Yeah, yours. It's
Yours.
like a yours signal. Yeah, I'm selling
And then
yours.
buy is like, come here.
So what was sell? I mean
buy,
buy.
that's
Buy
buy.
signal. Well, obviously
here.
I assume
Palm
was the
facing
opposite.
inwards. There it says
Traders
palm facing
combined this with other gestures, touching fingers to their chin or forehead in quantities.
Yeah, so like 2,100 and
Yeah,
whatever,
yeah.
maybe.
There you go.
Imagine having an itchy forehead and accidentally causing it a liquidation.
Yes. Yeah, everyone's scratching their head like this. I don't want to buy and you accidentally buy.
When you see that, oh my God.
Yeah, that's incredible. So, you know, it's not like, you know, I guess in the history, I don't know when exactly the New York Stock Exchange was open, but I guess it had been around for 40, 50 years before they even worked out that they could use computers. Anyway, anything else to add on that?
No, in terms of them, you know, moving over to a blockchain-based system, I think it's kind of cool. I think we need to wait and see how they do it and whether it works out. And it's one of these things you don't want to count your chickens before they've hatched. We haven't actually seen any real trading happen on there yet. You know, is it better? Do they do it in such a way that it falls over horribly on the first day and everyone's like, yeah, I told you blockchain sucks. And they're like, yeah, you're right, it sucks. We're never using it again. I don't know. I'm being a bit cynical here, but... Oh, by the way.
First one
I forgot again.
Right. Restart everything.
Yeah.
Did I get that signal right?
On the top.
We're on the top.
Yeah. yeah, no, I think it's sort of a general trend that we're seeing across the industry
Hmm.
is that people are just starting to realize, you know what, this thing makes so much sense compared to the old-fashioned way. And even though we're all computerized now, there's still a T+2 settlement windows and
Yeah.
clearing and all this kind of stuff that you just don't need anymore when you properly put it on a electronic system.
Yeah. Yeah, it's fascinating. And I wonder, look, I won't go into too many stories, but I do wonder how much of like the rules that we have to today's day, like we have rules based on opening times and closing times, and how much of that had to do with not necessarily the logic of business, but just to do with the logic of the technology at the time.
Mm.
You know, if you're handing out hand signals, it's pretty hard to trade when no one's there.
Mm.
So, you know what I mean? Like,
We probably don't need to do hand signals. You just walk up and...
you know what I mean?
Yeah.
Like the limitation was we kind of had these ways of doing business, which are
for sure.
technologically imposed kind of just ways of...
Because some guy just
operation.
wanted to sleep in till 8:30, and so he decided that 9 o'clock was the starting.
Yeah,
You know
the
what I mean?
chairman
And
was
then
just late.
everyone for the rest of history has gone 9 o'clock is when it is. Yeah.
Yeah, totally.
Quick question. So, yes, the stock exchange closes at 5 p.m., but what stops one provider or one retailer or one seller of stocks to say, oh, I'll do an extra half hour? Is it just an agreed time, or was it a limitation?
Well, when the stock market closes, there's no more trades, so no one's going to book anything new in. There is a concept of after-hour trading that happens as well, so you can still theoretically do trades, but nothing is booked in until the next morning. And you know, Duncan knows a lot about this stuff. Actually, one of the guys we work with, he used to do a lot of things for Combank and on the ASX. Yeah, you have like a situation in the morning where basically there's a whole bunch of after-hour trades that get queued up, and then they all just go and like interact with each other at the same time and sort of clear the after-hour trading.
It's
But
like
yeah,
a real-life mempool.
yeah, I guess so, sort of. But they all get transacted. It's not just the best ones get picked like in the real mempool. They all get done. They all get crossed up. But yeah, I guess it's possible. But you can't have trading after, like once the stock exchange closes, that's it. The books are closed. They don't book any more trades. Hello, Skynet.
Hey, welcome back, Skynet. Welcome back to 2026. Don't forget to get in nice and early. Fact check Nick a few times for us. Start the year off right, please. All right. We've got to keep moving. We promised we'd keep it at 30 minutes, and we are struggling already.
Yeah, what have we got? 7 minutes to go.
No, we'll probably might run a little bit
It's
over.
just a guide.
It's just a guide. Anyway, all right. No segue into this. I'll just start up with the ETF has its best week in months. So the Bitcoin and Ethereum ETFs have just seen their strongest week of inflow in 3 months.
I wonder,
Super cycle, Nick.
Yeah, no, I mean ETF inflows, as we've discovered many times throughout the last 2 years, have not necessarily much to do with people buying or selling, in the market or the price moving up or down. It generally does signal, like when the price is going up, ETF inflows are higher. So it feels more reactionary than sort of like the cause of the price movements, to my mind. I think a lot of this, the US tax cycle is different to Australia's, where July to June in the US, they're January to December. And so during the final throes of December, a lot of people are doing tax harvesting and like crystallization of positions and stuff like that. And often there's a lot of selling of assets to offset any gains you might have had in other areas. So we saw a lot of selling at the end of last year. We talked about it a lot. Now that the new year started, it's kind of almost like a fresh slate. People don't need to do that tax harvesting anymore. They can just get back to the good old-fashioned buying. Buying. And I reckon we're seeing a lot of that at the moment. So that's why we're seeing a lot of inflows on the ETFs. I don't think it's necessarily bullish for the underlying asset price, but yeah, I think it's better than selling.
Well, let's move on, because according to Nick, it means nothing anyway. Next one. So, okay, this would have been a better segue from the New York Stock Exchange one than the ETFs. But anyway, lessons learned in life. South Korea is now legalizing stock tokens as well. So they just passed South Korea's National Assembly, which I guess is their House of Reps or Senate. Actually, do you know what? I'm not sure which one. But their governmental law
Didn't you live in Korea for a little while?
Yeah, but I don't know. Yeah, but I don't know about their National Assembly.
Yeah, no, I don't know anything about Australia's National Assembly.
But anyway, the point is they made some laws for allowing the looking at the trading of tokenized securities. And according to Boston Consulting, this is going to be big. So they reckon there might be $250 billion worth of tokenized securities trading by 2030, which is not a long time away. And I imagine the Koreans are looking forward to becoming somewhat of a tech trading hub of Asia. I know they're always competing for capital, so this might be another step in the direction. So some basic details about it is they're drafting laws that they would like to have in place by the end of January 2027. So they've got a year to get this all in place. And it effectively allows participants that are already licensed and regulated to start offering up trading in tokenized securities, which is a continuation of this theme that we're seeing of DLT-based technologies being implemented alongside traditional markets to increase efficiencies.
Yeah.
It's probably the TLDR.
Yeah, I feel like once again, sort of the Asian market is just sort of a step ahead of everyone else. The New York Stock Exchange is looking to bring out this tokenized. Well, not. I guess there will be tokens of trading on a blockchain, and Korea's come out and gone. Hey, we're one step ahead of you guys, and we're this much further down the road getting this done. That's been a real theme, I think, for the last sort of 12 to 18 months.
Yep.
We've had a lot of stories about different, and it doesn't have to be just China or just Korea like the big guys, but or Japan, I suppose, is also often in the news. But we get Thailand and Indonesia and all these smaller Southeast Asian kind of countries all just trying out different blockchain-y crypto stuff. And I think that's just been a big theme for me, and I'm trying to figure out what the end game is. What's the results of this push? Like, is it intelligent design? Like they've got this grand plan. Because if they do, it's working. Like they're getting there much quicker than the rest of the world.
Well, I think actually I remember having a conversation with a Korean friend of mine who made the comment, in Australia and a lot of other places that have natural resources, for example, if you look at somewhere like Korea or Singapore or Hong Kong, they don't have a lot of land. They don't have a lot of natural resources. It's not like they can go, all right, we'll just go and dig up some coal and some iron ore and some LNG and some coal and, export it to the world, and we won't worry about it. It's kind of like, no, they go, look, we have, a population of whatever the population is going, well, if we don't invest in our people, so we've got human capital though. So if we're not leading in the forefront of areas like technology and education and, in the case of the Koreans, they export a lot of cultural export now too, whether it be, through K-pop or like the dramas, because, that is the future economic benefit for those countries. And if they don't innovate and if they don't try and attract capital, like look at Singapore and Hong Kong, they're always competing for capital because if they aren't competing for that capital, they don't have laws that are super conducive to attracting capital and human capital. What do they have? Whereas in Australia, you can afford to be a little bit more lazy because you're like, well, maybe the coal season's not great, but we've still got Queensland export bananas. Like, you know what I mean? Like there's less of an urgency because in Australia we have natural resources to fall back on, which rightly or wrongly perhaps make us a little bit lazier than we should be, given that we also have a well-educated population, and we could. There's no reason we can't, forge ahead with these type of things. But the imperative is not there like it is in other regional places, like we mentioned in Korea.
Yeah.
So that's my 2 cents. Whether that's the actual reason or not, I don't know.
No, but imagine if we did. Imagine we could export coal, and we could,
Yeah. Well, there's no reason we
do
can't.
other things.
Yeah, totally.
But you're right, we're lazy, I suppose. Like when you got the coal, I don't know. It's very, very high level here.
High level stuff.
Yeah, we're like painting every Australian with the same.
And of
same
course,
brush.
but unsurprisingly, Australia still punches above its weight. We still, we do stuff, but perhaps in places like Japan, for example, during after the Second World War, there was the notion of Japan Inc., where there was a really close relationship between the government and industry because they saw the same thing. They're like, well, we're just a small country. If we don't industrialize, we need to work hand in glove. Whereas, because everyone was on, like, we're all in this together a little bit. Whereas in Australia, we're all on the same page, but not quite as, we haven't quite got the imperativeness to make it happen sooner than later. But we're all on board. It's not as urgent.
Yeah, definitely.
Yeah, that's my 2 cents. And I'm sure some people out there might completely disagree with that. So my views only. Speaking of Mr. Beast and Mr. Lee, how am I going to tie these together? I don't know. Tom Lee's BitMine, or Tom Lee from BitMine, we know, Fundstrat. We talk about him every week. We just look for whatever. We've got the Tom Lee update each week. We just press the button and it gives a summary of what he's been up to.
Yeah, very much.
He's announced a $200 million deal with the world's most popular online creator, Mr. Beast. The agreement is an investment in Beast Industries and his forthcoming financial services platform. So again, we did talk about Mr. Beast recently about this financial services platform. So now he's powering ahead with Tom Lee. I won't steal all the details. Nick, what have you got for us?
I guess so. This is, to me, on the outward, it seems like a strange collaboration. Like, why? Where did this come from? Why did they pick each other? How did this come to play out? But I guess so. If we look at Mr. Beast, he's got something like 460 million subscribers. So a huge amount of subscribers. Where he's verging on 500 million subscribers. The most, he's number 1 on YouTube, number 2 or 3 on TikTok. He's got a lot of people listening to him. So I wonder if he kind of went out to market and said, "Hey, I'm going to partner with someone in crypto because I want to do this stuff." And he's been in crypto for a while now. This is not his first foray into crypto. And Tom Lee just sold him the best story or offered him the most money or whatever. It's an interesting concept because could this have happened in Bitcoin land? I don't really think so. Like, there's no MicroStrategy, I suppose, could have done something, but it just feels different in Bitcoin. Bitcoin doesn't feel like it can do these like corporate deals, if you know what I mean. Whereas it just seems like it's possible in Ethereum. Anyway, he's picked Tom Lee, who's runs BitMine or is the CEO or on the board of BitMine, which is the biggest Ethereum treasury company in the world at the moment. They've got like 5% of the supply or something ridiculous, and they want more. What does this mean for Ethereum? Good question, Nick. Probably it means, well, hopefully if Mr. Beast gets his stuff his ducks in the line, he's going to be starting to be able to offer things like, yield or whatever to his customers. And this kind of harks back a bit to the Circle/Clarity bill thing we were talking about before. So imagine, if we look at the numbers, 460 million subscribers, that's 10 times the amount of active wallet addresses on Ethereum in 2025. So it's a big number in crypto. If he was able to get his viewers to sign up to, I don't know, Mr. Beast Bank wallet or whatever, and put in $100 and earn 3% yield or something like that. So many people are going to do that. They're going to be using this thing and they're not even going to know it's on crypto. So that seems kind of interesting to me because the next, the next frontier in crypto seems to be how do we onboard more people, right?
Yep.
We've got a bunch of people who are quite interested in crypto. People are here for the gambling and the casinos and because they want to make money, the investing and blah, blah. Now, how do we get people who aren't so much in it for the tech and just get the average layperson on? And that feels like Mr. Beast could be part of that.
Yeah,
bridge.
that's really interesting.
I think what's also good to know here is that Mr. Beast has been embroiled in various scandals, crypto-related scandals before. So I'm not sure if we spoke about this last time we talked about Mr. Beast, but sort of historically he's been looked at as this real sort of philanthropist. He's a top guy. He gives away, like he paid for a bunch of cataract surgery for a bunch of thousands of people to make them, they were blind and now they see kind of thing. He's done all this stuff which really paints him as this great guy. But then if you look at his on-chain activity or what is supposedly his on-chain activity, he's involved in a bunch of sketchy stuff like pump and dump schemes and all this nasty stuff, fraud basically that people are accusing him of. And there's been really murky kind of results coming out of it. So there's this big outlash about what he'd done. And he said, look, this wallet that you guys are all looking at it's related to me, but I don't manage it personally. I don't have the private keys. It's part of a fund investment scheme that I'm doing. And they're investing in a whole bunch of stuff and I don't know what they're specifically doing. And everyone's like, oh, that doesn't really help. And then a year later, it did some Asta thing where it bought a bunch of Asta and everyone's like, oh, he's going to do that. And then he came out and said, this is not my wallet. I have nothing to do. And so he kind of changed his story on the wallet. And everyone's like, well, hang on a sec. You can't, what is it? Pick one. You can't you can't just decide when it doesn't do good things that that has nothing to do with you. So it left a bad taste in a lot of people's mouths when it comes to crypto stuff.
I didn't know that.
I think a lot of, I feel like a lot of this Fundstrat BitMine collaboration is possibly trying to get out from under all of that controversy and sort of going, look, I'm partnered with this legit top tier firm, biggest, treasury company for Ethereum in the industry, blah, blah, blah. And just trying to, forget that part of like the earlier part of his history. That's kind of, the angle I'm viewing for this stuff.
Interesting.
There's
Okay.
not many social media influencers that haven't been involved in some kind of sketchy crypto dealing over the past 3 or 4 years.
Yeah,
Like,
which is pretty
all
sad.
the big names
Yeah.
have launched or promoted a token which has been utter garbage.
Not
Yeah.
me.
There is a Nick coin. There is such a thing as Nick coin.
Sure there is.
You know who he is? That guy who's like, I choose rich. He was Nick.
Oh, that's right. Yeah, Nick, what was his? He's got a different surname, but
The
yeah.
guy with the guy with the impressive schnork, and he's always
Yeah.
there like,
Yes.
yeah.
Yes.
He's, I don't know.
Choose rich. Why does everyone keep choosing poor?
He's like deliberately obnoxious.
Yeah. He's on boats and everything, and yeah. But there's like, he's got controversies too, like about, he has all these like, hot girls on his boats, and they're like, he never paid me. Like I was on this boat, doing all this like content with him, and I never got paid. Anyway, yeah. It was
Controversies
pretty
galore.
funny.
Who would have thought? Well, just like on X, crypto Twitter, there's AI slop everywhere. So, look, it's like anything. I mean, when I remember the early days of the internet, I remember you first got an email and like there was no any protections around you were spammed mercilessly
Yes.
with like the same random things, which always made me. Do you remember some of the early stuff that was there? Like, it's always like, I don't even want to say it on air, but you know what I'm talking about.
Yes.
If you were around in the late 90s, you know exactly what I'm
But the
talking
real
about.
early stuff was more like, wasn't anything sus like what you're alluding to. It was more like, the chainmail thing, like pass this on to 5 other people and you won't get bad luck for 3. You're like, I've passed this on. People don't want me to pass this on anymore. Like you get this exhaustion, and you're not actually.
My
it's not a
context
scam,
list
you're
is
not
5
losing money.
people.
Yeah, you're not losing money on this thing, but you're spending your social capital very quickly with your friends, or the other 5 email addresses that you know. You're like, fuck, I better send it on.
Don't want to have 10 years of bad luck.
Yeah.
Well, same stuff, different day, I guess. So where's this leading into? So crypto Twitter, has anyone even been on crypto? I guess crypto X now. I haven't been on crypto X Twitter, X crypto now for a while.
Yeah. Okay.
But according to some interesting stuff, some AI crypto reply guys got banned. And they were responsible for nearly 80% of the posts that were crypto related, which is AI generated nonsense. And if you have been on crypto or X Twitter now, X crypto now, you've seen them. You know what I'm talking about,
Yes,
right?
100%.
You're the guys who just slop. So, you take out 80% of that. Turns out it was all just and it was all just 2 guys. So 2 guys using AI bots were just basically running 80% of all the content that was on
So
X
this is
crypto.
mental.
It's the dead universe theory right
The
there.
dead internet theory.
Dead internet, sorry.
Yeah, so this is, I find this kind of interesting because, in my timeline, I see a lot of people complaining, a lot of, I say influencers, I don't really follow influencers, I don't think, but, a lot of people who create, come out with these tweets and try and give people, alpha and whatever, complaining about how the algorithm's dead and it's totally broken. Then old mate Nikita, the guy who's like the head of product at Twitter, has been quite sort of interactive with this stuff, and he posted the thing which we're probably alluding to here, where he said, look, when you've got only a certain amount of reach. Every person can only reach so far with their Twitter follower because there's only so many people who are reading this stuff, right? And yes, the readership's huge. There's millions and millions of people reading it, but even so, there's also thousands to millions of people creating it, and not every person can read all million. You know what I mean? Like there's a limited amount of reach everyone can get. It's just physics. And what he was suggesting was that basically a lot of people were using up their reach in terms of what the algorithm was calculating by saying, good morning to just random people and sending out these GM texts to 100 people every morning going, good morning, and thinking they're part of this community. And then when they finally do post something that's worthwhile, the algorithm's like, mate, I've already sent your 7 good mornings out. I can't also post this other thing out. You've used it all out. And so everyone kind of got a bit upset at that. And they're like, why, we can't say good morning anymore. And and he was like, look, and this kind of thing, it unfolded into this bigger thing where in the end, this Nikita guy was like, guys, I don't even control the algorithm. That's not part of, I'm part of the product team. Like, I'm trying to help you out with this algorithm thing, but that's a completely different team. I'm just having a chat to these guys.
Yeah.
Anyway, I find it interesting, and like, here's the hot tip from me if you're using X or Twitter for your crypto stuff. What people are complaining about is the for you column, like Q, basically.
Oh, yeah.
And so in Twitter, you've got like the following, and you've got a for you, and following is just basically a timeline of people you follow, and the for you is where it tries to surface things that it thinks you're interested in. And this is what a lot of people are complaining about. They're like, look, there's a lot of interesting Twitter people out there, but my For You feed is filled with absolute slop. Like, I keep getting fed these, political baiting kind of tweets and all this nonsense that I'm not interested in.
I've noticed that as well. Yeah.
It's a rage bait feed.
It's a rage bait feed.
Yeah.
It's funny you mentioned that because I thought the same thing. I'm pretty sure like X is just rage baiting me. It's posting me stuff that I don't even agree with.
Yeah.
And I'm like, is this like some balance thing, or is it just like, I don't know. And I feel like that does have a really detrimental effect. I know this is getting off piece, but like, for example, my X feed right now is absolutely slammed with what's going on in the US. You got the Democrats promoting the Somali fraud stuff that happened out of Minnesota, and you've got the counterpoint to that, which is all the Democrats being outraged by the ICE presence in Minnesota. And I can't quite work this piece out. And I know this has got nothing to do with Twitter, but it's talking. I guess the context is same thing. The reality applies for what's happening in crypto, is that like you'll get one side and they're not even talking about something that relates to the other side. And it's kind of like, how do they know these two things are even related? Because like the Democrats are so focused on the ICE stuff and the Republicans only ever talk about the fraud stuff. They're related, but they're not. Neither side is actually talking to each other at all. And I thought maybe because you're interested, it's picked out that I was following the Somalian fraud stuff, that it's trying to like give me both sides. But maybe that's not actually what's happening at all. It's just trying to...
It's just trying to
I think
rage.
they're both
Trying to
got a
rage
point,
bait. Do you know what I'm trying to say?
They're probably both right, and either side don't want to concede the bad part about the other part's point.
Well,
if that makes any sense, like the fraud's there and ICE is crap.
I think
You can both be right.
A point here though is that Twitter is feeding you these two they're polarizing in their own, so they're not polarizing to each other, but these two polarizing points of view, and creating this image, this like in your universe, it's Democrats plus ICE and Republicans plus Somali fraud, and they seem like kind of separated, but it's actually not. It's just that this is the world that Twitter, the algorithm's painting for you, and so it like if that's the only information you get, it appears like that. Sorry, and I just wanted to come back to my original point, which was the way to, well, at least the way I'm fixing this. I sometimes use the For You thing because it sometimes shows interesting stuff, but by and large, I've created a list in my Twitter. So my original Twitter feed, like followers, was from back in the early 2000s. Had nothing to do with crypto, obviously. And now I've created a list inside which has a bunch of people who I don't even follow. They're just on my list, and you can somehow pin the list or whatever, and it becomes another column in Twitter. And now I just read that list, and I get only what I want. I get all of it. Just shows my followers in that list. I don't even get ads.
Hey,
so I get, if you click on a tweet, then you'll get an ad as in the reply sometimes. But in my list feed, it's just what I want.
Hey, that's pretty cool.
Yeah, and so obviously you got to follow the right people, and you got to and maybe you find them through the For You thing, and it'll show you 90% slop, but the 10% which is interesting to you, you add them to your list, and then you basically only read that list. That's my sort of tip for how to navigate the Twitter algorithm.
Okay, that's hard to try it. Well, we have run for 45 minutes. We said at the beginning we're going to do it for 30 minutes. Keep going.
What do we got?
We've got a few topics left. The Philippines and Bermuda embracing blockchain. Do you want to do that?
I don't know anything about that one.
We've got a question
from
TikTok, actually. So, Nanny Cryptos, great to see an exchange do live content for a change. He's an Aussie crypto educator, would love to do some collabs sometime, so he's reached out.
Cool.
Well, thanks for reaching out.
We'll have our people talk to your people.
Ooh.
By that, I mean Jared.
Yeah. Look, Ethereum transactions double. Hi, we were talking about, I guess, like any project in crypto, we need to kind of see activity move on chain really to demonstrate that people want this stuff. You can build stuff and it's super cool and all the tech guys froth all over it, but at the end of the day, no one's using it. What's it good for, right? So we've seen a doubling of the transactions on Ethereum. I know you've been a Ethereum bull for a while, and there's been so much upgrade here. It does seem to me, and this is, cop pay for whatever, it does seem to be that Ethereum has become the place to be.
Yeah, I would agree with that. So everything institutional level seems to be getting built on Ethereum. I haven't really heard many people talking about Solana in a long time, or any other kind of, no one's talking about Cardano, that's for sure. I would agree with that sentiment. Like a lot of the big announcements sort of late last year were, like the sideline was almost, and this is going to get built on Ethereum. And that was kind of, for me, the main takeaway, not really the sideline, because yes, stuff's going to get built. And I think, as we talked about before, technology will coalesce and people will work towards whatever's the cheapest and fastest and whatever. And blockchain stuff, crypto stuff, things that are electronic are inherently faster than any kind of manual process. So it doesn't surprise me that people are sort of moving online with a lot of processes, but where they choose to go is the big question. And we're seeing everyone just seem to be doing it on Ethereum. So that makes sense to me. Now, this paragraph is about transactions doubling. There's also kind of, we need to consider, capacity as well. So historically, a lot of times people, you talk about what makes one blockchain better than another. Well, what's the capacity? What's its transactions per second? What's its TPS? How many can it get through? Is it something that can be used in real life? Ethereum, Bitcoin is the worst. It can do, 12 transactions an hour or whatever it is. Something really low. Ethereum could do much more than Bitcoin. Its block time is like 12 seconds instead of 10 minutes. But it's still painfully slow in terms of the real world. And everyone historically back in the day would always compare it to the Visa and the MasterCard.
Yep.
How many transactions per second that does as a worldwide kind of global network. Ethereum has been sort of behind the scenes, and this is something we have spoken about with the the Pectra and the Fusaka and all these kind of upgrades that are coming through. They've just been laying the ground rules and laying this real platform for building up the transactions per second, whether it's on the mainnet, the layer 1 Ethereum, or whether it's on a layer 2 like Base or Optimism or whatever, Arbitrum. But this kind of stuff is really starting to come through now, and we're seeing Ethereum layer 1 being able to handle way more transactions per second. The layer 2s can do really huge numbers. What are the consequences of this? Well, again, initially it seems like a bearish thing because the Ethereum network now earns much less fees. So the actual network itself is generating, it's cheaper for everyone to use, awesome, but the network itself is generating less fees, which means less people are going to go on there and secure the network and blah, blah, blah. There's consequences of this. Actually, is that chart live now? Yeah, so if you guys can see this chart here, this is the Ethereum network transaction fee chart.
Yeah,
so
wow.
Those big spikes.
I remember those spikes back in 2021 when you were trying to, or 2022. You'd all of a sudden it would cost you more to send a transaction than actual transactional.
Yeah, easy. And so the first big spike there is kind of late 2020, early 2021, and then the next sort of big spike, which I don't know, can't see my finger, is in sort of mid 2022 or 2021, 2022. Those are kind of before hang on, I'll do it this way. Anyway, whatever. Those are sort of before all of these big scaling updates came through. And yeah, you're right. Like back then, I remember we used DeFi quite a lot, internally, for various things, and it would cost a lot of money. Like you'd be paying $100 for a transaction,
crazy,
which is big bucks when you're talking about something that's supposed to be on chain and cheap. And yes, it would settle a lot quicker than traditional finance, but it wasn't cheaper. And now I think we've got almost as many transactions or active wallets, as we did back in those peaks. And yet the fees are so low, which is great for throughput and all that kind of stuff, but not good for if you're a person who really wants to understand the, wants to take benefit from the value of the network because the network's just not producing as much money. It's not as valuable anymore. But for me, I think this is really a case of build it and they will come. So ETH guys go, okay, we're going to build it because they will come. And one of the big catalysts for this, I think, was the Hyperliquid. So when Hyperliquid came out and just showed to everyone, hey, this is what you can do on chain. You can do real-time trading, liquidations, all that kind of stuff on chain.
Yeah.
Suddenly a lot of blockchains were like, oh crap, we need to be able to do that. Now Hyperliquid was custom built very specifically and it was very tightly integrated to allow this stuff to happen directly on the layer one. But if other chains want to get anywhere close, they're going to have to build the capacity, and that's kind of what Ethereum's been doing for a long time now. And yes, the fees are low, and it's not like, if you look at the number of like the fees across the different chains, Ethereum, even though it is by far the biggest blockchain out there, it's number 4 on the fees earned list. So
no way.
Tron's number 1, Solana's number 2, Binance Smart Chain, believe it or not, is number 3.
That doesn't surprise me.
And then Ethereum.
Yeah.
So Ethereum is doing awesome things for the user, but not great things for the Ethereum investor. But I think like they're just playing the long game, and they're looking for, they're going, look, we need to make our system as efficient as possible, because yes, right now people aren't using it as much as it could be used, but in the future they will, and we need to be ready. And
interesting.
So they're getting ready.
Interesting. Well, that's fascinating. Hey, you know what? We've been relatively succinct today. We've only run over by double.
Yeah, pretty much.
But for those of you listening out there, look, 2026, new year, new us, new show. We're going to try a few things, and we want to hear back some feedback. So, well, first of all, if you haven't subscribed to us to get us on the For You algorithms, like that's a no-brainer. But
add us to your list.
If there's something, we've got Skynet here, and Skynet here, like our resident fact checker. We'd love to have more participation from everyone who's listening.
No AI slop reply, guys.
No, where's slop free? We're AI slop free here.
I mean, I'll take some slop.
A little bit if it helps us. But look, this is the year we want to try some new things with format and how we get some content out to everyone. And we want to hear from you guys about the types of things you want us to discuss. Certainly being at the exchange, we have some unique insights into dealing with most of the parties that you're probably interested in learning about. So we'd love to provide some content and some insights that you guys are interested in. All you got to do is hit us up, write a comment, reach out to Jared. Reach out to any of us. We'd love to hear from you. And that'd be fantastic. So thanks for stopping by for 2026. Nick, hope you've had a great break and ready to go. Jared, getting ready for a big year?
Absolutely.
All right. Well, thanks again for stopping by. We'll be back now, back on track. We'll be back this time each week, trying to keep to the point. But we really love to hear from you, and thanks for stopping by. We'll see you next week.
Cheers.
Bye.
Lee and Nick with the Moonshot flow. Dispatch live, let the market glow. Crypto vibes where the numbers show. To the moon we go, let the podcast blow. Digital coins, we dissect them quick. Blazing insights, Lee and Nick. Price prediction sharper than